have it, the noes have it. The motion moved by Srimati Sushma Swaraj is negative.
FDI and multi-brand retail to stay. The government wins the crucial vote in the Lok Sabha with 253 votes to 218 against, as Samajwadi Party and BSP stage a walkout just before the voting begins. But the Rajya Sabha is derailed once again. The BJP sees red, alleges the government is working against the debate and a vote in the upper house.
This is called arrogance of power. और ये सरकार उसी सत्ता के नशे में चूर है.
The opposition cries for foul as the motion to roll back FDI and multi-brand retail fails. The left's Raja blames the loss on doublespeak by the SP, and the BSP calls the outcome a moral loss for the government. Industry calls the government's victory in the lower house a turning point, says policy clarity will help India grow as an investment destination. He expresses confidence that the reforms process will now move faster.
There is no amendment, there's delegated legislation.
The government clarifies its position. Salman Khurshid, the former law minister, says PEMA notification is not an amendment, may not require passage in the upper house, as the opposition is jumping the gun on what will happen in the Rajya Sabha. Markets trained in a narrow range but still make it a red letter day. The Nifty manages to close marginally above 5,900 for the first time since the 13th of April 2011. Its highest close this calendar year. The Sensex gains 43 points. European markets gain as China indicates it will stick with growth-oriented policies. Wall Street opens to choppy trade after Citi says it will eliminate around 4% of its total staff to save $1.1 billion. The Supreme Court gives Sahara more time to repay its bond. Investors orders Sahara to make the payments in 3 installments after depositing an initial amount of 5,120 crore rupees with SEBI. The 2 remaining installments fall due in January and February. Good evening. Thanks very much for joining us here on India Business Hour. What a day it's turned out to be for parliamentary democracy and for the reforms agenda. The government has won the vote on retail FDI in the Lok Sabha as was expected. The Samajwadi Party and the Bahujan Samaj Party walking out of the House, bailing out the UPA in this crucial vote once again. With 471 members participating, only 218, that's how the numbers stack up, voted in favour of the motion moved by opposition leader Sushma Swaraj, which opposed FDI and multi-brand retail. The government got the majority, that's 253 votes, moving against the motion thus being defeated. The House also rejected the motion against amendments to the Foreign Exchange Management Act. That was also gone in favour of the government, but it was Mulayam Singh Yadav and Mayawati who saved the day for the government yet again by choosing not to participate in the vote. The BJP and the left parties crying foul after the vote. The BJP said the government is arrogant of power. The CPM saying that this was a moral loss for the government.
किसानों और खुदरा व्यापारियों की उपेक्षा की गई है, इसलिए समाजवादी पार्टी ने इसके विरोध में बहिष्कार किया है. वोट नहीं डाला, ये पार्टी का निर्णय था.
आज वोट के बाद ये स्पष्ट हो गया कि ये सरकार अल्पमत में है. ये लगातार तीसरी बार हुआ है जब ये सरकार लोकसभा में अपना साधारण बहुमत भी जुटा नहीं सकी. पहली बार लोकपाल के संविधान संशोधन विधेयक के समय हुआ था, दूसरी बार महंगाई की चर्चा के समय हुआ था और आज एफडीआई पर हुआ. लेकिन बहुमत में ना होते हुए भी हम अपनी नीति को आगे बढ़ाएंगे, ये कहना सत्ता की हेकड़ी होता है. दिस इज कॉल्ड एरोगेंस ऑफ पावर और ये सरकार उसी सत्ता के नशे में चूर है.
This exposes the partisan agenda of the BJP and the opportunism of those who have voted along with them, particularly the left, because they are conflicting ideologies. Right. So it's only anti-Congressism. Right. Anything what we want to do, right, they want to be the roadblocks.
Anti-Congressism, says the man of the moment, Commerce Minister Anand Sharma. We've got a power-packed panel lined up here on India Business Hour to make sense of what went on in Parliament and what we should expect in the Rajya Sabha. Sunil Jain of the Financial Express, former DIPP Secretary Ajay Dua, Mohit Saraf, partner at Luthra & Luthra in our Mumbai studios, Mukesh Bhutani of BMR Advisors, and also the former Secretary General of FICCI and the man who authored the report on FDI and multi-brand retail, Rajiv Kumar. Gentlemen, appreciate you joining us here on India Business Hour. Hour. Before I get to you, let me first exclusively play out for the benefit of our viewers what CNBC TV 18 was told by the External Affairs Minister and the former Law Minister Salman Khurshid on whether or not the FEMA notification amounts to an amendment and whether it requires to be voted on by the Rajya Sabha, and if a vote does indeed happen or it doesn't happen, what happens to the FDI policy. Salman Khurshid clarifying, saying that this is not an amendment at all. Listen in.
There is no amendment, there's delegated legislation. See, an amendment would have required a vote in the House to amend. That's not what's happening. So FEMA is not being amended, but consequential changes, subordinate legislation, which normally you only place on the table of the House, and then when the time passes, that happens. I know of cases where such notices have not been placed on the table of the House at all, and yet courts have said that amendment stands. Okay. So there are many issues in this. I think that we've thought this out, and I don't believe that there should be any sense in any political party, including the BJP, trying now to claw back what they have lost by saying we won't allow this to go through by 2 votes or by 3 votes.
But we will have a debate and we will have a vote on the entire motions that have been moved.
Of course, haven't we agreed to that? We have agreed, and the chairman has agreed to that, and that's what we will do tomorrow.
Well, that is the External Affairs Minister Salman Khurshid clarifying that this is not an amendment to FEMA at all, and hence it actually doesn't require to be voted on by the Rajya Sabha. To understand what this really means, let me get the lawyer and the former DIPP Secretary, Ajay Dua. Do you believe what the government is saying? Does it not require and does it not amount to actually an amendment to FEMA, as Salman Khurshid is pointing out?
An amendment to the FEMA can be made only by the Parliament, because the lawmaking powers rest with the Parliament. The rules thereunder are amended by the government, and that is delegated legislation. Further on, one other step in delegated legislation is regulation making power, which under FEMA has been given to the Reserve Bank of India. If any of these 3 things are changed, the law is amended, the rules are sought to be amended, or the regulations, it must go back to the Parliament, and that means the Parliament, meaning both houses of the Parliament, must approve it or reject it or have a joint session then to determine how to proceed forward.
So what Salman Khurshid is saying then, you're saying doesn't hold true if one were to go by what the law says?
Unless it's now being said that it is none of these things, not an amendment to FEMA, it's not amendment to rules or the regulations, but we are doing something else, which is
what can this something else be? I mean, a notification, doesn't that amount to a change of rules?
It does not amount, as long as you are not notifying the regulations. Change under existing regulations, you are issuing a clarification. A number of our press notes have been done in that manner.
Okay.
The fact of the matter is, if somebody challenges these in a court of law, will that stand the scrutiny of court? That has the substance been changed and we have not gone through the entire process, then it would not hold water.
Okay, Sunil, I'm going to come to you in just a bit. We also had Salman Khurshid say that, you know, I've heard of this matter in the past being taken to the courts and so on and so forth, and the courts have actually upheld it. Mohit Saraf, you've been looking at the rule book. What do you make of this?
I think Salman Khurshid has a very valid point what he's talking about. And I think Ajay Dua also has a similar thing. What is really important is, are we amending section 48? The answer is no. We are not amending.
Okay.
And if you are amending section 48, that is an essential legislative function that needs to be approved by both Parliament. And if cannot be approved, then it has to be approved at a joint sitting.
Yeah.
Here, it is a regulation under section 48. The courts have said right from 1976 to as late as 2007 that even if you fail to put it in the Parliament, that's still a law. There's no problem, because, and what Salman Khurshid is saying, at least on this point I tend to agree, that this is a delegated legislation power.
Yeah.
Once it is approved, even the section 48 says that it has to be approved by both houses.
Yeah.
Once it is approved by one house, one of the rules of Lok Sabha, which is 238 rule, says that any amendment to an approved rule of the other house should actually be dropped.
Okay.
So for all purposes, this has really been approved.
So you believe this is a done deal?
It's a done deal.
Sunil Jain,
absolutely.
You believe it's a done deal?
Absolutely, because what has happened is the government has made the change. Now, in order for that change to be rejected, both houses of Parliament have to reject it. If one house accepts it and the other rejects it, then there is no rejection. So I think it stands. That's the point which Salman Khurshid is making. That's the point that Kapil Sibal has been making. And now I finally got a lawyer who's agreeing with what I'm saying. So
Ajay Dubey, you still don't agree. You're still not convinced.
Yes, I am not. I'll be very candid about it. I think the procedure for change of subordinate legislation is exactly the same procedure as it is for changing the law.
But Ajay, if I can just come in for a moment, this is what Salman Khurshid said, that we've done it in the same way in other cases and the courts have said it's fine. Now
if it's not been challenged in a court of law,
yes,
it's a different matter.
Yeah.
The fact is, if through notifications one is seeking to change any of the two subordinate legislations, which are tiers of subordinate legislation, or the law, it's tantamounts to tinkering with the law, which would require parliamenary approval.
And if you were secretary, you wouldn't have allowed this to happen.
would you have allowed it to happen or not?
I can now speak from hindsight.
But I think what is important is that what you're saying, the three things, none of these things are being met here.
Exactly.
And therefore, this does not require an amendment. That's what I'm saying. What it's saying is section 48, which is a FEMA, which is a rule making, that is not being amended.
Okay.
A notification, basically what we are talking about, the press note, when you were...
So it's a clarificatory notification that the Reserve Bank is actually
issued, and therefore that actually under the rules did not even require to be voted in the parliament.
Okay.
Now since that has been voted, tomorrow Rajya Sabha speaker can actually reject it to be voted also.
Okay, so this disagreement clearly will continue. I'll come back to you, gentlemen, in just a bit. But let me go across to Rajiv Kumar, the man who was the author of the first report on FDI and multi-brand retail. Rajiv Kumar, you've gone through this process several times in the past when it's been done and then taken back, done, then taken back. Do you believe that this is it? Do you believe it's a done deal today?
Of course it's a done deal today. It should have been a done deal many years ago. But I can't see this now being reversed. And I'm actually quite sad and disappointed to hear some reports that say that the NDA representatives have said that if and when they come to power, they will reverse this decision. I hope that's just not true, because, you know, they had rightly supported this change, this reform. They know that this reform is necessary for modernization of the Indian economy, and they would do well to not take this one up as their, you know, plank of, as their policy plank, because they will do a great deal of disservice to this country and to the people of this country, because retail trade has to be modernized. Yeah. Mrs. Swaraj has been saying that this is not rocket science. Yes, it's not rocket science, but it does require very specialized skills and management technologies to be used, which I'm afraid Indian domestic
Rajiv Kumar, for the benefit of viewers, you know, through the day we've heard leader after leader talking about how this is anti-farmer, anti-India, anti-small retailer, it will kill domestic manufacturing, it's pro-rich, it's for big business. You know, through the day, people of this country have heard that debate play out in Parliament. How do you respond to this doomsday scenario that is being painted by leader after leader?
I mean, this is, I think, most distressing, because there is hardly an iota of truth in any of this. You know, about the fact is that, you know, it is going to lead to a huge surge of imports. Why would it do that? Because, you know, imports of retail goods carry a huge, still a very high tariff rate. Instead, I'm sure every clever retailer would order their production from small and medium enterprises to produce their own brands, which will then compete with the established brands being produced by, you know, by multinationals like Unilever and Procter & Gamble, and will give consumer a better choice. I mean, about mom and pop stores being closed, we did this huge survey. You know, and it's not just a 64% survey. About 1,000 mom and pop stores are, you know, interviewed, and they all said that they will give these guys a big fight. So, you know, these are all myths. And what I'm really distressed about is that senior leaders have fallen prey to ideological, you know, compulsions and to some propaganda, which is going to, you know, which really is just very selectively looks at, you know, the performance of one big store or one big retailer in some country, rather than look at, you know, some very authoritative works done by, you know, people like Professor Reardon and so on, which shows
I'll come to you, Rajiv Kumar, and what this means for the larger reform agenda. But let me just go across to Mukesh Bhutani. Mukesh Bhutani, there seems to be consensus that this is a done deal. It may not actually require to go through Rajya Sabha at all. We'll find out tomorrow. Finally, the suspense on that matter will finally end tomorrow. But let me ask you this, and the kind of complexities that this throws up, because this is an enabling provision or an enabling law, as the Commerce Minister explained in Parliament. Each state government has the right to decide whether they will allow multi-brand retail, not allow. They finally will be the ones issuing the license to a multi-brand retailer. The complexities of this, what is this actually going to mean in terms of implementation on the ground?
I think it's an uphill task. Firstly, on the debate earlier, I think many of my friends sitting in your studio in Delhi forgot that there is a public interest litigation filed by ML Sharma, and I think the government still has to close on that public interest litigation. So I think whether you require an amendment to Section 48 or not, that's eventually the Supreme Court is going to decide. All the Supreme Court had said is that the press note opening up retail FDI is not adequate. So I think that question, in my view, remains open. Though I agree.
You're agreeing with what you're agreeing then with what Ajay Dua says, and because, as you very rightly pointed out, the Supreme Court was categorical, saying that a press note does not clarify matters.
Yes, I think so. But I think the response that the Attorney General has filed in the Supreme Court, the affidavit that it has been filed, it's not very clear whether he is seeking an amendment to FEMA or is he seeking just a supplementary or a subordinate legislation to facilitate and hence not require an amendment to Section 48. I think we need to see that. I think to your other question on, I think this is an uphill task. I think the most important aspect is for states to come together and have some level of semblance when it comes to the safeguards. It is important for states to provide the safeguards, but states cannot just go in different directions. So you may very well have a situation where the northeastern states say that we need to protect our small, micro and tiny industries, and a textile manufacturer in Tamil Nadu may say that we need to protect the textile industry. Now those kinds of restrictions are acceptable, but I think states can very well go in different directions. I think what we require, and this is not to add another set of regulation, is to have some kind of a central regulation, like you have a central regulatory commission which governs tariffs for the power industry, and then you have the state regulatory commission where you make the requisite filings. I don't think the idea is for the government to have multiplicity of regulators. You can very well work on self-certification basis, but the important aspect is who is going to regulate this industry. And
that's an important point that you make, Mukesh, and I'm going to come back and discuss that with our panel here. But very quickly, let's just listen into the reactions coming in from industry welcoming the government's victory on the floor of the House. CII President Adi Godrej saying that this is going to be a turning point as far as the government's reform agenda is concerned.
I think it will lead to more reforms. I think some of the pending reforms in Parliament, such as insurance and FDI in pension funds, will also go through, and I feel this will enable the government to take forward other even more important reforms like the goods and services tax.
I think, there's a lot more hope that we can collaborate with the farmers to be able to bring in efficiencies in the system, which is ideally shared by everybody in the channel, including a lower price to the consumers and a better realization.
On the sideline and
well, those are reactions coming in from industry saying that this is a big reform boost as far as the government's agenda is concerned. Disagreement on my panel. I'm going to discuss all of that and more when we return after a very short break. Stay with us. You're watching India Business Hour. Welcome back. You're watching India Business Hour. Big day for the government with the Lok Sabha defeating the motion moved by opposition leader Sushma Swaraj. More reactions coming in on the government's victory. A very happy Kapil Sibal, who was the opening batsman for the government, saying that this proves the majority of the government, and of course more reactions from the opposition as well.
It was a little curious to find a new definition of the arithmetic of democracy by the leader of the opposition in the Lok Sabha. She suggested that the persons who speak on the floor of the House represent the democratic spirit of the House, without realizing that ultimately it is the vote that counts, which is reflected on the board of the House at the time when the vote is taken. But we are very happy we have the approval of the House.
हमारी बहुत बड़ी नैतिक जीत हुई है आज के दिन, और सरकार अल्पमत में है ये बात भी साबित हो गई, क्योंकि बहुमत के लिए उनको 272 का आंकड़ा चाहिए, उनके पास मात्र 254 का आंकड़ा था। कई सदस्यों ने कहा कि एफडीआई नहीं सीबीआई जीत गई। तो उसका मतलब स्पष्ट है कि कहीं न कहीं भाषण को, विरोध के भाषण को विरोध के वोट में वो परिणत नहीं कर पाए, कहीं न कहीं कुछ अदृश्य शक्तियों ने उनके ऊपर दबाव बनाया।
So the BJP stands exposed because there is no policy against the domestic multi-brand retail. In fact, Purti Group itself is one of the fastest growing multi-brand retail as far as domestic investment is concerned. Why are they against FDI in multi-brand retail? Because they are in favor of FDI also. So they are in favor of FDI, they are also in favor of multi-brand retail. But when it comes to FDI and multi-brand retail, they seem to suddenly discover that they are not for it. So I think BJP stands exposed.
महाराष्ट्र में हमारी कोलिशन की गवर्नमेंट है। कपिल जी, आपने कल भाषण में कह दिया कि महाराष्ट्र में हमने हम महाराष्ट्र सरकार ने इसके लिए हाँ भरी है, लेकिन मैं हमारी पार्टी की ओर से भी कहना चाहूंगा कि वहां कोऑर्डिनेशन कमेटी है, वहां बैठेंगे, चर्चा करेंगे, उसका गुण और दोष दोनों का हिसाब करने के बाद ही हमारी पार्टी की ओर से वहां हमको करना या नहीं करना उसके बारे में हम हमारी राय वहां पर सूचित करेंगे।
So the NCP also playing its cards right, saying that you can't take it for granted that we will support the policy in Maharashtra. But let's get back to our panel and get wrap-up comments. Let me come to you, Rajiv Kumar. What does this mean for the larger reform process now? Because the assumption is, because the BJP has been embarrassed as far as FDI and multi-brand retail is concerned, that they will offer less resistance now when it comes to other FDI-related reforms, insurance, pension, etc.
I tend to take the view, Shireen, that this particular reform is shown, this particular move, that the progressive reforms is entirely in the hands of the government. And it's not as if the reform is being impeded by or held back by the opposition there is. Whenever the government has shown that it wants to go ahead, like the nuclear civil deal or now the retail, the measures have gone through. So which is why I really put the onus squarely on the government and the government, to lead the process of reforms, and not just the sort of, the bills which are already there in the parliament, but I really must point towards the fact that everybody is now watching how they will handle the fiscal deficit. And if for example, the food security bill is pushed through, or if this cash transfers is in addition to the major subsidies that we have already, rather than to substitute it, I'm afraid the fiscal deficit is going to look much worse. And so I hope the government will now take the reform process seriously and will not let electoral considerations get in the way of bringing the economy back on the high growth trajectory.
And as the author of the report, Rajiv Kumar, before I let you go, I hope that that we don't actually see any sort of a U-turn this time around. But thanks very much for joining us on India Business Hour. Mukesh Bhutani, I want to come to you now as far as the signal that foreign investors will take from what has happened in Parliament today. Forget the uncertainty about the FEMA amendment notification and the technicalities, but what is the message that foreign investors are going to take to your mind?
I think there are two aspects. If I'm watching this debate as a foreign investor, I don't know whether this debate is about FDI. I think it seemed to me that the debate is about organized versus unorganized state. I don't think the debate was FDI and foreign investment. But I think the debate in Parliament is certainly useful because you at least get to know what each political party has in their mind, whether that's a hidden agenda or whatever you call it. I think what is important is that 8 states and 2 union territories from a foreign investor standpoint is not adequate confidence. I think just like we have a GST legislation, the central government now will have to work with the states to convince them, because if the state governments start going in different directions and start having their own set of regulations for checks and balances, the FDI in retail is not going to succeed. So let me give you an example of an industry, say alcoholic beverages. The government opened up alcoholic beverages for FDI almost 15 years back. Gujarat state, as a part of its policy, still imposes ban on manufacturing, distribution and consumption of alcohol. But you cannot say that FDI in alcoholic beverages has not succeeded in India, because every alcoholic beverage is there in the country. And I think that the same thing has to happen in the FDI in retail. So I think if the state governments go in different directions on imposing their own set of regulations, this is not going to succeed. The important message for the foreign investor is that the government may have won the vote on FDI in Parliament. Great. I have been a votary and a supporter of that for almost a decade, but 8 states and 2 union territories to start with is not good. I would like to see that in the next 10 to 15 months we have 16 states out of the 25 states that we have in the country.
Okay, let me get wrap-up comments from our panel here in Delhi. Mohit Saraf, Salman Khurshid saying that foreign investors should keep their checks ready, and within the next 24 hours all will be clear and they can start investing in India. Is it going to be as simple as that?
Keeping check ready and investing are two different things, and I think there are uncertainties. But I think
what is ready for whom, perhaps?
Yeah, but I think the key question.
For whom?
Okay. But I think the key question is that this is like the nuclear deal. This is a path-breaking deal. What it shows is the fractured democracy in this country. It shows a lack of public duty with people who are in control. And state governments will have these issues, but still what it shows is at least government is determined to do something. I think for all this time, government was not even determined to do anything. And I think that's a very positive thing.
Is that the biggest takeaway, the fact that the government has finally exercised its right and the government has finally shown its will to continue as far as the reform agenda is concerned?
Certainly. I think this is a clear case of government's intention to push through a reform process. It shows that the government is aware of what is required. But whether it will actually result in what the government desires is an altogether different issue.
Question, yeah.
For 2 reasons. One, out of the 53 or 54 cities, which are the million plus which are qualifying, in the 8 states and the 2 union territories, they're not even
18 cities.
18 to 19 cities, because in some places they've said the largest city is allowed. Second, we have already put a whole lot of restrictions, whether everybody would be tempted to comply with those, bringing $100 million, etc.
So you believe those conditions will be restrictive?
And the third one, if I might say, an important one, the message which is being sent is that if we come to power, we'll reverse it. We are creating a whole lot of uncertainty in the minds of foreign investors. Having said that, we also have an example of Walmart saying if everything were clear, it will still take us 2 years to open our first set of stores. Which means, important as this change might be, it's going to not have much effect on the FDI except changing the sentiment.
Sunil Jain, final words from you.
Rajiv is absolutely right. What this tells you that the onus is on the government. If the government wants, the government reduced the reserve price for 2G spectrum, it happened. The government gave a 42% discount on Hindustan Copper, it happened. So everything is in the hands of the government. This shows that the government wants to do it, it can do it.
What's your headline tomorrow?
Walmart has an easy day.
Walmart has an easy day. Gentlemen, appreciate you joining us here on India Business Hour. The debate will continue, but we'll track all the other big stories tonight. Coming up, Sahara gets more time from the Supreme Court to repay its investors. Details when we return. Thank you. You're watching India Business Hour. President Barack Obama is speaking about the fiscal cliff. Let's listen in.
GDP ratio, or debt to GDP ratio, then every credible economist will tell you that you can't just do it on spending cuts. We can't cut our way to prosperity. But there's got to be a balanced approach in which we also are bringing in new revenue, partly because our revenue levels are as low as they've been.
We're trying to decide here if this is worth sticking with, given the difficulty they're having with audio. It's clearly not the president's mic that is turned on. You can sort of hear what he's saying, but not very well. So as he makes some headlines, we'll bring them to you. In the meantime, want to get some reaction, at least to his early remarks. Joining us, Lynn Jenkins is a Republican representative.
Well, that is President Obama speaking, not very audible there because of some audio issues. But let's quickly bring up the U.S. markets and tell you if they're reacting to what President Obama has had to say so far as getting a resolution on the fiscal cliff is concerned. Obama saying very clearly there is no one more than me that wants to get that deal done. Not much really going on for the Dow. The NASDAQ is down by about 1% or so. And the S&P 500 has also lost about 0.5% or so. So that's the situation as far as the U.S. markets are concerned. And we have to bring up Citi because they have announced significant layoffs to save about $1.1 billion every year. The Citi stock reacting positively to that news, up by about 4%. So that is the big global headline at this hour. When we get more details from what President Obama has to say, we will get them to you. But let's move on to another one of the big stories back home. Sahara has got more time to repay investors in the OFCD case. The Supreme Court asking Sahara to make an initial deposit of 5,120 crore rupees with SEBI and pay the remainder in 2 installments. Malvika Jain with the details. Malvika, so in a sense a breather for Sahara because it has been given more time.
Well, that's right. A 3-judge bench of the Supreme Court, headed by the Chief Justice of India, today gave an extension of time to 2 Sahara Group companies to repay entire amount to their OFCD investors, and has also given extension of time to the companies to deposit documents with SEBI. Remember that on the 31st of August, the Supreme Court had directed 2 Sahara Group companies to refund 17,400 crore rupees along with 15% interest, given the fact that the court held that the OFCDs which these companies had issued were illegal. But now with this order, the Supreme Court, Sahara Group companies will have to deposit 5,120 crore rupees upfront. By the first week of January, they will have to deposit another 10,000 crore rupees, and by the first week of February, they will have to deposit the remainder amount, which is going to be computed by SEBI on the basis of documents which the company is going to submit to them. Now, remember that while Sahara Group has submitted that 5,120 crore rupees is the only amount which remains outstanding towards these investors, we have seen advertisements being issued by SEBI cautioning and warning investors to not come under pressure from the group. Now, whatever is the remainder amount, it remains to be seen what that will be, because it is going to be computed by SEBI. And the Supreme Court today also said that in case Sahara Group fails to comply with the order and repay the investors by this time frame which is now being provided to them, SEBI will be free to initiate action against the 2 companies and the group.
All right, Malvika, appreciate you joining us. Here's the latest in what we're picking up from our sources in the deal between Jet and Etihad Airways. Sources say Etihad is scouting for banks to raise capital to buy into Jet Airways. Remember, reports suggest that they are looking at picking up 24%. Kritika Saxena, who broke that story, standing by with the details. Kritika, break this up for us. What is the likely value of the deal and how much is Etihad looking to raise?
Absolutely. The deal value for Etihad, looking at buying around 24% in Jet Airways, for Etihad could come up to around $400 million. It could be a tad below $400 million, but we understand that Etihad is looking at scouting and raising capital in order to fund this deal. So basically it will be a combination of debt and internal accruals. $150 to $200 million is the amount that Etihad is looking to raise according to our sources, and we understand that they have spoken to a couple of bankers. In fact, they're looking at bringing in around 4 foreign banks and taking in a consortium of banks to raise that $150 to $200 million. In addition to this, we also understand that key executives from Etihad will be coming into India towards the latter half of this month, and we could possibly see the valuation details being finalized. However, to see an official deal being closed and a term sheet being ready, we could have to wait till the first quarter of calendar year 2013.
Okay, Kritika, appreciate you joining us. Now, even as the standoff between GMR and the Maldivian government continues over the operation of the international airport there, GMR's management today reiterating their right to charge the airport development fee, saying it's an integral part of the concession document. GMR also refuted charges of corruption in the bid process conducted by the World Bank arm, IFC. Listen in.
It's been almost 11 months, and we have been requesting the government of Maldives that please get the approval for charging of ADC, which will be beneficial for both the government of Maldives as well as GMR. Today, the charge which was supposed to be paid by the passenger is not being charged on the passenger. It is in fact a charge which is getting effected on the Maldivian airport company, and that can cease as soon as the parliament passes the bill and we can restart the charge from the passengers. ADC is currently being adjusted against the revenue share which is paid to the government of Maldives.
So GMR continues to maintain that there was nothing wrong with the bid process. Up next on India Business Hour, is Cognizant hitting a speed bump? We'll tell you what we've heard from the company's filing with the US regulator when we return. Well, as India fears that foreign retailers will swallow small businesses, here's a big retailer looking to exit the US. British retail giant Tesco has said the company is looking to exit its loss-making US operations. Tesco stores have not been profitable for the last 5 years, and the company is now retreating from the US. So another big retailer in trouble as far as the US is concerned. Meanwhile, back home, the Lal Street traded in a narrow range. However, the Nifty did manage to close marginally above the 5,900 mark for the first time since the 13th of April 2011. The Sensex ending the day marginally in the green at 19,391. So markets continue to look pretty solid at this point in time. We'll have to see how they respond to the news that came in from Parliament, which happened after the markets had closed. Cognizant's fast run up the growth ladder may have hit a speed breaker of sorts, or is likely to hit a speed breaker of sorts next year. In a regulatory filing on compensation details of top executives, Cognizant hints at a 12 to 16% growth rate for 2013, which is lower than the 20% targeted for 2012. Kritika Saxena brings you the details.
Despite being the second fastest growing Indian IT company, Cognizant too is being rocked by global headwinds. If industry body NASSCOM revising its growth target for FY13 wasn't enough, IT major Cognizant too has hinted at a moderated 12 to 16% growth for the coming calendar year, lower than its guidance of achieving 20% growth in CY12. In an 8K filing with the US Securities and Exchange Commission, Cognizant has outlined that executives from its top management team will receive 100% of their performance-based stock units if the company achieves a revenue target of $8.5 billion in the year 2013, a growth of 16%. It has also outlined that the executives will receive 0 performance-linked stock units if the company does not achieve a revenue target of at least $8.2 billion, a growth of 12%. The executives outlined in the 8K filing include Francisco D'Souza, Gordon J. Coburn, Rajiv Mehta, R. Chandrasekharan, Karen McLaughlin, and Stephen Schwartz. Commenting on the filing, JP Morgan in an analyst note said, and I quote, "This may well be more conservative than normal given Cognizant's experience in 2012. While the official guidance figures for CY13 will be given by Cognizant in February when it announces its full year numbers, this 8K filing hints at a relatively moderated growth in calendar year 2013, and taking into account the volatility in the deal pipeline for the IT sector, this can create more concern going ahead." In Mumbai, Kritika Saxena.
Well, could things be slowing down for Cognizant? But up next, the Cabinet will take up the big-ticket investment clearance body, erstwhile called the NIB, tomorrow. Well, today was a crucial day for the reform agenda, and tomorrow will be a big one as well, because the Cabinet will consider the formation of the Cabinet Committee on Investment, what was also earlier known as the National Investment Board, to expedite investments of over 1,000 crore rupees and above in the infrastructure sectors. Anshu Sharma joins us now with the exclusive details. Anshu, so finally, the Cabinet will take up the proposal for the Cabinet Committee on Investment.
The Cabinet will be meeting to discuss formation of Cabinet Committee on Investment or National Investment Board, which will be chaired by the Prime Minister along with key ministries. This is a crucial move on part of the government, as the NIB is expected to fast-track big infrastructure projects which are being delayed due to various clearance issues. If approved by the Cabinet, the Cabinet Committee on Investment will have powers to monitor and expedite investments of rupees 1,000 crore or above in the manufacturing and infrastructure sectors. Some of the functions of the Cabinet Committee on Investment will be prescribed time limits for taking approvals for projects in the notified sectors, monitoring progress of projects where there has been delays beyond stipulated time frame. The Cabinet Committee on Investment will have a say in it. The Cabinet Committee on Investment may also have the power to simplify rules or procedures followed by the concerned ministries for a quick decision. In case of delays in project, the Cabinet Committee on Investment or NIB will have a mandate to take a decision. Apart from Cabinet Committee on Investment or National Investment Board, Cabinet may also consider extension of paddy and rice export ban, and Cabinet Committee on Infrastructure may discuss ways to simplify the process of awarding road projects. Back to you.
All right, Anshu, appreciate you joining us. So that's the big one on the Cabinet agenda, this Cabinet Committee on Investment, what was earlier known as the National Investment Board. With that, it is time for us to wrap up this edition of India Business Hour. Your World at 10 is up next. Thanks very much for watching CNBC TV 18.